Good morning, everyone, and welcome to Weekly Profit Talk. As you might imagine, we do this every single week. We do this every week on Wednesday at 8:30 a.m. Mountain Time. That is 7:30 in Los Angeles, 10:30 in Florida. Good morning, welcome. Hope you're having an awesome Wednesday so far. Getting the halfway point of the week started here. Let's talk about this week's topic. We've been beating the drum about taxes all of February. And quite frankly, I want to shift a little bit and let's talk about something else that will make a lot of difference in your practice. The topic is your practices must have 90-day cash flow forecast. 90 days, I'm arriving at that figure for a very specific reason. If you are able to forecast a little bit into the future, it's basically long enough to get an idea of what you can look forward to, but not so long that the numbers kind of get off into the hallelujah zone. If you've ever had to create a budget for, say, for example, an insurance compliance, and they make you do like a whole calendar year, that kind of thing, you know that you create one of these things in January, and by November, it's basically grown wings and flown out the window. It's just total guesswork, right? But with 90 days, you can basically predict some of your biggest things. Um, let's talk about what some of those are. Give me just a quick sec here. I think a couple of the biggest things that help to know in advance with a 90-day forecast would be hiring decisions. You find yourself quite often wondering if you put that specific nurse practitioner or even an additional physician in place. Um, your cash flow forecast can give you an idea if the increased anticipated revenue is justified by the staffing needs. And you don't just pay people. If you want to remain competitive, you have to give them some benefits, depending on your market, of course. And it's a big country, so everybody's different. But I find that typically people like to at least offer 50-50 medical programs, that kind of thing. Um, but in any event, staffing is probably going to be your biggest expense if you have more than one person working for you. Now, if you're a country doctor and you work out of a commercial zoned four-bedroom home and you use the rooms for examining rooms and you got a front desk person, then congratulations, you got a lean, mean operation there. But chances are you're going to have somewhere between 6 to 25 people under your employ, be they actual employees or contractors, or what's pretty common these days is I see a mix too. It just depends on who you got working for you. But if you've got an idea of your cash flow needs, it certainly helps with the kind of hiring decisions. And again, we believe that 90 days is a pretty sweet spot for that window. Equipment purchase, that's another one. Sometimes people think about that stuff late in the year. They find all of a sudden they're going to have a lot of reportable, taxable income after all expenses. And it's like, well, I'm going to end up paying quite a bit of tax. Maybe it's a good time to get that X-ray machine. So, again, that's another thing that's dependent on cash flow. You don't always want to debt leverage everything that you have because debt leverage comes with a cost. It's instant capital, but that capital costs you an expense called interest. So, and everybody knows what that is. Basically, paying back a loan is a split proposition. Part of it pays down principal, the other part is interest, and you're basically just making somebody else wealthy with that. So, um, with good cash flow projections, you might find that you're able to, in fact, um, meet your equipment needs without going into hawk up to your eyeballs. Owner distributions is extremely important. I'm hoping that if you're making over 60, $80,000 a year and your practice is scaling, getting a little bit bigger each year, that you've seriously considered or have already elected to be taxed as an S corporation. Now, if you've done that, that means that you're taking a wage out of your business. If you're not, start because sooner or later you're going to get caught. So it's just IRS wisdom on that is that you're supposed to pay yourself a wage before you take distributions, but it is needs to be reasonable. And if you are if your practice is taking in about the same amount of money that would cost to replace you, nobody's expecting you to pay yourself the entire amount of money that you take in a year. If it's only $100,000 and doctors in your area make 120, your practice is growing and scaling. So that's what we mean by reasonable. We can actually split that down to a lower number as your practice grows until you can afford to actually pay yourself the amount that doctors really do make. And then the remainder of that net income is not subject to ordinary, or excuse me, to a Social Security and Medicare tax. And that's the whole point of the S corporation election, saving tens of thousands of dollars. Any questions about that? I'm coming to you in three different media. Let's talk. It's one of the specialties of my practice. So another thing is estimated tax payments. If you are making over 80,000, that you should be paying yourself 36 to $40,000 a year in wage. So you're going to have about $40,000 in net income that are not subject to any withholding. You do need to make estimated tax payments four times a year. It's the middle of the month of April, June, September, and January. I'll say it again in the future. Every one of these choices improves dramatically when you can see 90 days in the future, right? Right. Your forecast versus looking at your bank balance. Now, I have this experience as an accountant with some of my own clients. They basically see money, spend money. That's not the way that should work. Basically, and particularly if you are an S corporation, if you take more money out of your business than you make in net income, it sounds like it's hard to do, but if you're using a credit card, it actually gets easier. But that excess distribution is actually subject to a second tax, so you do not want to do it. Just basically don't take more money out of your business than you make in net income in a year. And if you're making that reasonable compensation, of course, you're living on that at least, partially anyway. So your forecast is a working tool, and it's based on hard data, not me have money, spend money. Okay. So money coming in, what you actually collect, cash basis. And what I mean by that is um, if you're a hospital or a major medical organization, the wisdom of the Centers for Medicare Services and all the big people believe that you should be on the accrual basis of accounting, which means you count your money when you bill for it and you book your expenses when you bill your vendors. But cash basis is just the other way. You actually account for your revenue when it hits your hand, and your expenses, same thing. You account for them in the month in which you actually spend the money. So that is what I mean by cash basis. Money coming in, money going out. You got your payroll, benefits, rent, supplies, selling, administrative costs, basically all the other expenses after costs of goods sold and staffing. Um, and don't forget about your malpractice insurance. And of course, you do want to self-withhold for estimated taxes. I wrote that down a second time to remind myself. Set yourself aside a personal savings account and just call it tax savings. You should be putting money away into that every single month. If you make estimated taxes payments online to the IRS, it's on a, let's see, it's IRS direct payment is what you want to type into Google, and it will come up with a website with a blue make a payment button. That's how you do it. And you can make payments out of a savings account. And that's what you want to do. At least let the money work for you a little bit before you fork it over. So a bank balance tells you where you've been, a forecast tells you where you're headed. Valuable difference. Patterns become visible and surprises become manageable. Now, what's the real reason most practices don't do this? Um, Without reading all this stuff I wrote down, major number one thing is it's hard. It's not easy, okay? It's not necessarily because it's complicated, but the thing is, you're a doctor. You spent 10 years between school and residencies learning how to be a doctor. Nobody really taught you how to do the business stuff. Now, sure, all this stuff is Googleable and you can use AI and you can do quite a bit that way, but is that the best use of your time? Absolutely not. Your zone of genius is helping other people with a highly specialized degree of education and service, and you're able to bill substantially for that. If you waste time on your own accounting, you're basically taking time not only away from your patients, but from your gross revenue. And that's the thing. And like I say here, if you're choosing between doing that and seeing your next patient, the patient's always going to win, right? So A rolling 90-day forecast, updated monthly and reviewed with someone who understands the numbers, takes the guesswork out of the biggest decisions you'll make this year. Now, I'll kind of wrap up on that. If you're wondering, well, 90-day forecast sounds great, but how do I start doing one of those? There are tools out there, but again, let me go back to this. Is that the best use of your time? I'm coming to you on one of three media. You're either watching me on YouTube, LinkedIn, or of course, Facebook. And what they all have in common is a comments capability. If you type help or more information or let's talk or something along those lines into any one of the social media you're seeing me on right now, whether live or on replay, we'll get back to you, let you know how to book a free discovery call, where we just get to know each other and see if it would resonate for us to work together. Teach you how you could put tens of thousands of dollars back into your pocket and also use tools like 90-day cash flow forecasts to basically have your entire scoreboard and know how to call your plays going forward. So, if that sounds interesting to you, I'd love to hear from you. So, for this Wednesday, hope you have an amazing rest of your day and enjoy the gradually warming weather and longer days. And if you have a chance today, do something randomly kind for a stranger. So until next week, Wednesday at 8:30 Mountain Time, we'll see you then for weekly